What's up, guys? It's February 7th, 2025. Looks like we had a down day to sideways day in the mini. Had two big legs and then we went sideways for most of the day. I think it was a hard day to trade. I didn't take too many trades on the E-mini. I was around scalping around gold and NASDAQ was all right too. So here we go. Daily chart, 15-minute chart. Where's the EMA? Oh my gosh, it's saying it has to update. Well, I just did this the other day. Okay, there we go. This one needs an update too, whatever. Okay, so again, daily EMA. This is not the daily EMA. What is going on? Okay, now it's not here. Oh, snap. Okay, now we're gonna do it. I didn't realize this didn't catch up to that. That makes sense. Okay. Daily chart, 15-minute chart. We had a sell-off, bouncing off the 50% level of the breakout bar from January 15th, and we rallied for three legs higher. Leg one, pull back, two, pull back, leg three. This isn't an inside bar. It is breaking out of the third leg, but once we're in a third leg, we have to think range bound price action and the chances for continuation significantly. So, the reason we say we avoid third legs is because most traders are looking to swing. The chances for a swing are higher in the first and second leg, and if you need a third leg, it's range bound price action, and it's best to wait for a deep pullback, or you're gonna start scalping. It's not that we avoid third legs because they're the third leg. We avoid the probability for continuation in the third leg. And if you were expecting a new high today, well, you could scalp out how we just said. The one, pull back like two, pull back like three, possible pull back like four. We're in the third or fourth leg, and you have to scalp because look at today's bar. Bulls that thought we were going to rally to infinity, reverse, and now we're selling off into hell. So that's not true. We're just going sideways. We are testing the breakout point here. This low could be a buy. We won't know until the next couple trading days. Bulls rallied into the previous swing point and we sold off. So there's in a trading range, it's buy low and sell high, and we can see that play out here. Bulls are buying the breakout point. They get their three legs higher. They sell out at the previous resistance. Bears now went three legs lower, and there's a loose three legs here. Leg one, pull back. Leg two, pull back. Leg three. For now, we don't know what's going to happen to this bar. Trading rangers expect deep pullbacks. So here's leg one, very deep pullback, testing the breakout point. That's pretty much 100% pullback. I mean, 100% would be up here. So I kind of talk in 30s, 50s, and 70% pullbacks. Oh, I'm going to start at least. Leg one, pullback. Leg two, deep pullback. Leg three. 15-minute chart for today's price action. So we're looking at this bar here. Looking at this bar here. Where? Okay, we're looking at this bar here. I wanted the crosshairs to line up on the 15-minute chart. And then we're going to look at this bar here. So this bar, we have a sell-off here. So this is the previous day's high, overnight session, and we sell off here. So we're looking at here to here. Something is not lining up. I want to see something here. Here to here to here. Oh wait, this has gaps in it. Yeah, so this is the regular trading hours. Now I see. Let me save that. There we go. So now it's lining up. So this high is the crosshairs on the 15-minute chart. We rally up to the previous swing high here, and we sell off. So this tail is this here. So this is the high. This is the low. We rally. This trend line break is this break here. We see there's two legs within. So within this bull leg here, within this bull leg, there's two bull legs. Leg one, deep pullback. Leg two. And that puts us at the high here, which is testing the breakdown point from the previous rally, and it sells off. Bears are sitting around here in this gap because they were trapped bears. Excuse me, they were trapped bulls. So the bulls that were buying the low of this candle are going to buy more, and they're going to get out at break even or for a small profit. That's obviously not a small profit. That's a lot of points, but you guys get the gist. And then we get three legs lower. So this one leg has three legs lower in it. This is kind of like how we look at the 5-minute chart and 1-minute chart. So if you were to take away the time frames, this is a 5-minute chart and this is the 1-minute chart. You get what I'm saying? How it's the same concept. It's fractal price action. Higher time frame, lower time frame. Don't even really worry about the actual daily 15-minute. It's what's going on within the bar, the guts of the bar. So we start out here, strong leg one, breaking out past many bars. Ask yourself, is this strong to get at least one tick lower? I think it is. We get a 3-legged pullback, leg one, pullback, leg two, pullback, leg three, reverses. The bulls reverse. So we have a strong bear leg. Really bad close. We're actually closing right around here. So bulls bought the EMA. They bought the EMA after a good rally. This is over 20 bars. First touch of the EMA is typically a buy. Bulls rally, leg one, pullback, leg two, second leg trap, testing the breakout point, sells off for a very weak third leg. Within this third leg, leg one, pullback, leg two, pullback, leg three. There's also 3 legs down here. Leg one, pullback, leg two, pullback, leg three, rallies again. Because why does it rally? We're in the third leg. Probabilities for trend continuation in the third leg significantly go down. That's what we see with this pull bar here. This is the third leg, leg one, pullback, leg two, pullback, leg three, sideways price action. Bulls get 3 legs higher. Leg one, pullback. This pullback is really strong because it broke below. That's not what you want to see in a good bull breakout. You want to see a shallow pullback like that. So I want to go back to what I want to reverse what I said. I said this could be the start, but since we have a new swing point, we can reset our count. Leg one, inside bar, pullback. Leg two, trend line break on the high of this bar, rally, testing the breakout point. One way to count it, or you could still do it. This is how I was originally going to count it. Leg one, pullback, leg two, pullback, leg three. There's always going to be multiple ways to count things. There's fractal ways, there's visible ways. What is the most important is we understand how the probabilities shift. 2 seconds, I'm about to cough. And again, the probabilities shift in... Man, I don't know what happened. I just got something stuck in my throat. So probabilities shift, and the way we can figure out where we are within those probabilities is where we are in the market cycle. The market cycle goes from breakout, opposite bar is the start of the channel phase, 3 legs higher is the start of the range phase. And what's interesting about the 3 legs higher, it's not, this took me a long time to understand. So let's say this is the first bar, now we have an opposite bar, and then we're going to channel. This leg is so breakout, pullback, leg two, pullback, leg three. This leg three does not mean the start of the trading range. And this is again, you have to read the type of price action we're getting. This does not mean we're getting an extra leg. It could, if that's what the price action says, but leg one, pullback, leg two, pullback, leg three. The last leg in a trend, so the last leg in a channel phase is the first leg in a trading range. And then bears are going to want to target this low here. And then, they're going to get their 3 legs down. And then look, now we're testing the breakout point here. So you guys see how the market wraps within itself. And what's interesting is I actually inadvertently just drew this price structure. I did not mean to draw it, but let me show you. So we get the rally with the rally. So rally, first opposite bar signals channel. Leg one, pullback, leg two, pullback, leg three. There's a lot of legs. I'm simplifying this. Leg one, pullback, leg two, pullback, leg three. Could say, well, I'm gonna do it a little bit bigger actually. So breakout, leg one, pullback, leg two, pullback, deep pullback, testing here, rally, leg three for the bulls. So now we're here. Now I'm gonna talk about this side. So the last leg in a trend, if this entire thing was a trend, this would be the first leg in a trading range. For the trading range, this is leg one. For the trading range, this is going to be for the trend, this is going to be the last leg, and it's going to be the first leg in a trading range. We don't know it's the first leg in a trading range until it unfolds, until it wraps into itself. So that's kind of the point is what I'm trying to bring. Is that it's not going to go up here and then trend or range. It's going to wrap back into itself. 3 legs down, leg one, pull back, leg two, pull back, leg three. And now we're going sideways again. And that's what I didn't draw here. So that's pretty cool. I did not mean to draw this down here, but that is kind of the rotation I follow on everything I do. I think it's extremely important to understand the market cycle so you can you look at the market cycle from a big perspective. So okay, this is the start of the market cycle, restart of the market cycle, because This is restarting the market cycle from this perspective. But you add in yesterday's price action, this whole thing is range bound. This whole thing is range bound. Oh. I'm gonna hide it. So this whole thing is range bound. I don't even know how it showed up. Then we get a breakout 17, really bad breakout. There's so much overlap. Bad follow through 18. So let's say this bar is the breakout bar. Bad follow through 18 immediately starts the channel phase. Leg one, pullback. Like we don't really get a new high. So we're gonna call this a complex pullback just to keep the conversation going. Leg one, pullback, leg two, pullback, leg three, tail on 32 makes a new low here. Excuse me. Leg one, pullback. Leg two, we go one tick below here on bar 29. Sells, however you guys want to call it, rally, and we get the third leg down, bar 34. So now we have 3 legs lower, leg one, pull back, leg two, pull back, leg three, and we go sideways. So how I was talking about the market wraps into itself, the last leg in a trend, this is the last leg in a trend because we made a new low, is the first leg in a training range, and that puts us into this rally right here. And now we have leg one, pull back, leg two, pull back, leg three, shallow rally, 48 through 50. And then this is the first leg in a training range. So if this is a fractal breakout, and then it sells off. So now we're back in a training range. 3 legs, leg one, pull back, leg two, pull back, leg three. But we'll get into the breakdown just kind of want to explain the market cycle because it's really important you guys learn the market cycle to trade stocks. Because the market cycle, and I say trade stocks because you can trade stocks. This is not exclusive to the E-mini. You guys are watching me trade NASDAQ, trade gold, trade micro Bitcoin futures. It's all the same. I'm just applying the template I learned on the micros, and now I'm applying the template over and over and over again. Give me 2 seconds here. But that's why I keep talking about the same things, because it really is the same thing. The market cycle repeats itself. So I'm sure some of you think all this guy does is repeat himself, and I do because I'm following the market cycle and leg count. Gap up, bar one, bull bar, good for the bulls. We should see some sort of continuation, and if bar one is the only continuation, so be it. This bar has a tail up top, so bulls are not willing to buy high. I already start thinking, hey, why didn't this close on its high? Bulls are buying pullbacks. It pulled back, bulls bought pullbacks, so not the strongest trend. Bulls are willing to buy pullbacks, but not highs. Bar 3, bull bar, but again, not closing far above bar 1's high. Bulls are more inclined to buy a pullback. We get a pullback here, rally, bar 4, pullback, rally, bar 5, really weak rally, and I just counted 3 legs, leg 1, pullback, leg 2, pullback, leg 3. You guys get it. 3 legs higher. We're at the end of the market cycle. We're going to go range bound now. Bar 6 kind of looks like a shallow pullback with this tail. Bar 7, surprise bar. This is going to happen every now and then. If you get stopped out, you're just going to have to take that because surprises happen all the time. When a surprise happens in a meaningful way, the surprise can get a second leg, and that's how you can make your money back. And I say make your money back very loosely. I don't necessarily mean revenge trade, make it back. I mean wait for the trade to come to you. So maybe short bar 15, that's a low 3. Maybe short the first pullback. I'm not saying just get stopped out and reverse to make the money back. I'm just saying you will make your money back because the surprise gets a second leg. And you do get a second leg, which you wouldn't make your money if you caught this bar or caught anything after that. Hopefully your stop wasn't your stop. I've been trading relatively tight stops lately because I want the market to take me out. It's easier for me to trade multiple stocks if the market's taking me out. So rally, bar 7, surprise bar showing to get a second leg down. Bar 8, first opposite bar starting the start of the channel phase. Leg 1, pullback, leg 2, pullback. Bar 17 is the third leg down for this price action here, which is climactic. Bar 17 is so strong and it's breaking out of this range here. It's strong to get its own 3 legs. Again, leg 1, pullback, leg 2, pullback, leg 3. We go sideways, creating a bear flag. I actually was long above this bar. I got this bar, bulls that bought this bar made 1R. And I was thinking we were going to go trading range price action test around here. My target was only the EMA, and I got filled on bar. I got put on the tail of 17. That's very sketch. So yeah, sold off, trapping all the bulls with their stops here. Again, surprises get second legs. We've had 2 surprises now, so this could also be a second leg trap. Leg 1, pull back. Leg 2, second leg trap 17. Bulls get 3 legs higher. It's a wedge top. Leg 1 for the bulls, deep pullback. Leg 2, pullback. Leg 3. Bar 22 is climactic, testing the breakout point. I had a sell over below 15. I got tagged and scalped out on 23. When I'm talking about my trades, they're happening on NASDAQ. I can't say I might have been short the micros. I'm just, the bars are relatively similar, so just know it's not exactly per se exact. Like on NASDAQ, it was right here, so I went short and I got filled. And I can't remember if I shorted this one or NASDAQ, but price action is similar. So sells off, strong to get second leg down. Here's that second leg, 23, 24. Third leg, 1, 2, 3, 4, 5, 6 bear bars in a row, trying to get second leg down. 6 bear bars in a row, but look at bar 30, breaking the trend line. So we actually have a second leg within that. Leg 1, pull back, leg 2, second leg trap, right to support. I'd be very cautious shorting 31, 32, reversing, selling off, trapping bears, reversing higher. Bulls get a second leg, leg 1, pull back, leg 2. Overall market cycle is chain range price action. Vacuum test last leg for the bears 34, making a new low, completing 3 legs lower. Leg 1, pull back, leg 2, pull back, leg 3. We rally for a few legs. 35 starts the rally, leg 1, pull back, leg 2, pull back, leg 3. That's a summary. There are other ways to count this leg. 36 is inside bar, 37 rally, sells off. Closing at 36 is high, so we already know this is a weak rally because, again, bulls are not buying highs. 38, strong bar closing above its high. Strong bar closing above 37, but it's into the swing high here. Not the best breakout. We would want to see bars like this breaking out if you guys are looking to get to back to the high of the day. It's very unlikely. The best the bulls are going to do today is get range bound price action. If they were to rally to the high of the day, that would be a bull surprise. 40, 38, rally, pullback 39, wedge top 40, sells off for 2 legs lower, leg 1, pullback leg 2, testing the breakout point here, 42, rallies again for another 3 legs, leg 1, pullback leg 2, pullback leg 3, wedge top into resistance into the higher time frame EMA. This is the 45-minute EMA. I don't look at the 45-minute chart. I'm going to start swinging it eventually, maybe at the end of the month after this month. I don't know my months, January, February, March. Maybe at the end of March I'll start swinging the 45-minute chart on a synthetic indice because I want to swing for like hundreds of points, not for 10 points a day. So that's a feature that I shouldn't be talking about unless I'm doing it. Double top at range highs, bar 51. Again, restarting the market cycle from a fractal perspective, breaking out below the EMA, gets its own 3 legs down, leg 1, pull back leg 2, pull back leg 3. This entire third leg could also be this entire leg 1 here could also be a third leg for the overall day. Leg 1, pull back, leg 2, pull back, leg 3. Delayed pullback is we're in a chain range. Mix a new low here, and then we go sideways, rally, sell off 3 legs, leg 1, pull back, leg 2, pull back, leg 3. This is the worst kind of sell off. I've been talking about this quite a few times. There's 3 types of trend line breaks. There's a leg 1, pull back, new low, leg 1, pull back, recent low, leg 1, pull back, higher low. All day we've been getting either recent lows or new lows until we got to 72. We actually got a higher low, and the market went a little more up. So be cautious of that if you're looking for a new low. It's late in the day, and bears are not making new lows. Something was brought up in the Discord about where is this gap indicator where I can't find it on TradingView. I used to draw in gaps because I just was learning them, and I thought it'd be a good habit. Now I'm using the indicator that was given to me by a mentor that I can't share with you guys because it was given to me. I'm using it to speed up time. Yeah, I was wasting about 3-4 minutes of video drawing in gaps and explaining them. But I am gonna. It was talked in the Discord. The eyes are the best indicator, and that's true. So let's just draw in a gap or two here, just as a quick exercise, so you guys can start to practice on your own. A gap requires 3 bars. 1, 2, 3, and what this gap is showing. Okay, there's a gap. So what this gap is showing is that there are trapped bulls. Bulls who bought here. So let's say they see this as a breakout point, and they have a buy and they want to get in on a pullback. So the bulls that buy this bar as a bit of limit order, or you can even say 50% because it's a big bar. They're looking for a rally, pullback, leg 2. They buy this bar and immediately get trapped. All these buy orders are now underwater. So that is what produces the gap, and that's why it takes 3 bars to make a gap. In this situation, bulls were able to buy more here, and they can get out on this rally. There's another gap here, so now we can do a bear gap, just so you guys can see both sides, and I really urge you to learn to draw your own gaps. I do it to save time, but even when I'm trading, I showed my trading view charts today. I don't actually have the gaps open. I think I try and trade with the most minimal things to keep things decluttered or cluttered. I don't know what the opposite of that is. So now this is a bear gap. How are bear gaps produced? Well, bears see this leg 1, pull back leg 2, and they think this bar shot to get its own second leg. It actually does right here, but we're gonna ignore that. Leg 1, pull back leg 2. They put sell orders here to get short. They want to get short around the high of this bar's trading range. So if this bar is a trading range, it is a trading range. So this bar right here is a trading range because it's an outside bar. Bears want to short the upper half of this bar. Let's just say they're gonna put an order here just for the conversation. This rally's strong enough that it traps bears. They actually don't get their scalp. So what the bears want is the same thing the bulls wanted. Here, here, here. They want a here, here, here. What they get is trapped, and now they have this. They get out here actually at break even. But let's say it kept going higher. They would sell more and eventually get out at their first target, making money on their second target. So gaps are showing trapped limit order traders, which trapped limit order traders help the trend out. So that's that on gaps. I was thinking if I ever get extremely profitable, I'll have my own gap indicator made that I can give out to you guys, but I can't in good faith give out this indicator. So I hope you understand. And let's go over the measured moves real quick. Here, this is not a measured move I would go for, but I think it'd be good to know if this bar got 1-to-1, and it did right here. And then you can see once it got 1-to-1, it actually got 1-to-1 almost very quickly at 17. People started front running profits and it started to rally, and then 1-to-1 here. The market was more. We have a lot of bear bars. It set the tone for the day, and it set the tone for the day, but it was still range bound price action. The best the bulls can do is get range bound. If they got a rally, that'd be a surprise. That'd be a surprise rally after 2 bear surprises, 7-17. So there's one measured move. That's a swing trader's measured move. I'm not necessarily inclined to go for that. I went for 15. I met that very quickly with this bar here. Excuse me. You short this. Oh, you can short here. You get your 1-to-1. You get your 1-to-1 pretty quickly. When I was short here 15, I started to go for a 1-to-1 of this because this was a low 2 to me. It was a bad low 2 because it's coming at a better price, but I thought the overall context would let me in. But I just got out as 24 stars to stall because my target was already met and I didn't want to give back. I didn't want to break the system. 1-to-1's met there. If you're looking for a 1-to-1 here, you're looking for a continuation in the third leg, which we've talked about quite a few times today. It's not good. And the chances for continuation significantly go down in the third leg. 38, bad buy for the bulls. However, they did get 1-to-1. You could buy the pullback 42. Bulls have been buying pullbacks all day. So buying high, just know you're going against the grain. Now you're looking for a third leg. Now you're looking for a measured move of this, thinking it's going to be a bull breakout. However, this is the third leg up with a fractal third leg. Leg 1, pullback. Leg 2, Leg 1, pullback. There's a lot of things going on in this price action. So just the summary leg, to summarize the legs: leg 1, pullback, leg 2, pullback, leg 3, leg 1, pullback, leg 2, leg 1, pullback, leg 2, pullback, leg 3, wedge top into resistance, double top, however you want to call it. There's still 3 legs here: leg 1, pullback, leg 2, pullback, leg 3. So let's say you buy the breakout, you're actually buying into resistance on a third leg. Now 41 and 42 are very shallow pullbacks. You can sit through that, but you're sitting through a pullback that on this kind of day. So I don't know what type of confidence you bring to the table if you see all this bear bars and you're sitting long on 42. Nothing wrong with it. The trade did work out, but it eventually, the 51 could have very well been 42. 51 is a good breakout. You get 4 bars in a row, but we're trading at the low of the trading range. You can get 1-to-1 of 51, which I think is a safer play. In trading ranges, you got to go for 1-to-1. If that, you got to be scalpy. Trading range price action can be read by gaps closing, and the last 3 gaps closed. So this gap closed, this gap closed, this gap closed, this gap closed, this gap stays open for the rest of the day. Last 3 gaps closed, that gap stayed open. So it's a weak bear trend because we don't even have 2 gaps. We have 1 big gap, and that gap got closed. The gap right away. It didn't get. It got tested. I'm saying it got close to these 2 bars. So there's a few measured moves. I used to do 3-bar micro channels, but I'm getting there's different. I'm going for measured moves of 1 bar now. If that bar gets 1 hour, so change it up a little bit. Let's just talk about this to keep the. Okay, how are we gonna do this? I want to think because I want you guys to see there's like 9 legs in here. So this is the price structure we're gonna examine. This is 1 set. I don't know if this is going to be confusing or a good idea. I'm going to make that a little bit thicker than a Snicker. That's so this black box is 3 legs. This green box is 3 legs. And then this green box is also 3 legs. I'll make it blue. This will make sense when I show. Okay, we're gonna go with this. I don't want it to get too confusing because I'm already kind of getting confused. So what I've done here is this big black box is 3 legs. This green box is 3 legs. This blue box is 3 legs. And this is showing a trend line break so we can keep our place on the 1-minute time frame. Just draw this. I'm becoming a fan of this. Let me know if you guys like this type of breakdown or if it's kind of just like, this guy's just rambling on. I've gone past 20 minutes, but I don't know what to tell you. I think this is important. And you know, I do 20 minutes. I don't want to burn people's times, but you can't really just study for 20 minutes. That's not a lot of time. I said this was 2 legs higher too, so we're gonna start there. Okay, so this is cool. Let me just adjust that to right there, and there's also 3 legs there. I totally did not talk about that. So this is also 3 legs. This is great. This is great. Let me get this black box in there. Okay, let me get my handy dandy drawing tool out, and let's start. This is like 12 legs actually. So 32 is here. 32 is 156. Rally. Pull back, second leg trap, rally, pull back, second leg trap, creates a double top, and there's the 3 legs within. So there's 3 legs in bar 33. Excuse me, there's 2 legs in bar 33. Leg 1, pull back, leg 2, pull back, leg 3. You could say this is a wedge top. You could say this is a double top. This leads to a big sell-off. 3 legs lower. Leg 1, pull back, leg 2, pull back, leg 3. Third option for the Bears. Remember this conversation. They got the higher low. They got the higher low here, and the market starts to go a little bit sideways to up. 36 is an inside bar right here. Pulls back. 37. Good, not a good breakout, but a rally into the EMA. That's what we're looking at right here. Pull back 39 right here. 40, these 3 bars right here. And then we see this pullback here. This is the pullback, which comes in 2 legs. So it's hard to see doji because of these lines, but there's a leg 1, pullback leg 2. Leg 1, pullback leg 2. Double bottom, higher low, good for the bulls, bad for the bears. Let me get 3 legs up right here. Leg 1, pull back, leg 2, pull back, leg 3. So leg 1, pull back, leg 2. Excuse me. Leg 1. How did I count that? Leg 1, pull back. Okay, you know what? This is a better count. Leg 1, pull back, leg 2, pull back, leg 3. So I counted this as a trend line break. Leg 1, pull back, leg 2, pull back, leg 3 into resistance. Sells off. That's a wedge top with a wedge top. So there's a wedge top here, like push 1, pull back, push 2, pull back, push 3. Push 1, pull back, push 2, pull back, push 3. Wedge top, and then we get another 3 legs right here. Leg 1, pull back, leg 2, pull back, leg 3, wedge top. And then remember the black box. Leg 1, pull back, leg 2, pull back, leg 3, higher low. Alright guys, this is 30 minutes long. I I don't know if they're going to be longer or shorter going forward, but what I do know is this is important stuff to learn how to day trade. Day trading is harder than investing, but if you learn to day trade, you can invest like a monster, which I can't wait to start getting payouts in investing. So it'll be fun, and I'll be trading. And when I invest, I'm still going to be investing in break, and I'm going to be looking for third leg fades and higher time frames because third legs are range bound price action. So things that sell off in the third leg, that's buying low. So that's okay. I'm getting away from the day trading, and I'm still following the market cycle. That was the bottom of it. Is when you learn the market cycle, it's applied everywhere. You kind of manipulate your strategy a little bit. Like, oh, I'm gonna invest, so I'd rather buy a third leg. Oh, I'm day trading. I'd rather sit out the third leg. Nonetheless, guys, enjoy your weekend. Thank you for tuning in. We did a whole week of live streaming. I am tired. I can't say I'm going to live stream every single day. I wanted to do it this week to see how I would just feel. And it is tiring. So I appreciate you hanging out with me. I like talking to you guys. It is fun learning some stuff. We talked about the gut biome today. That was cool. Gonzo, if you're watching this, shout out to Gonzo. Hope you guys are doing good. If you learned something, share the show. Don't be a hoe. I'll talk to you guys in Discord. Link in the comments. My name is Ding Dong Online. So yeah, if someone named Ding Dong's talking to you, that's me. Because sometimes people are messaging me like, yo, are you Ding Dong? Yeah, I'm Ding Dong. Price action breakdowns is Ding Dong in Discord. Have a good one. You learned something, share the show. Study till your eyes bleed. Type till your fingers fall off. Have a good one, guys. Talk to you on Monday. No drinking and driving, but have a good drink if you're of age. Okay, talk to you later. Bye.